Welcome to the Finpari binary options tutorials, lesson 6. In this lesson, we will talk about the trend lines, uptrend, downtrend, support and resistance levels, trading strategies in general and breakout strategy in particular, as well as psychological and round price levels. So let's get started with something we want to learn more about, trading strategies. If you were attracted by binary options, you probably have heard about the trend and trading strategies based on it. Is that so simple? To start with, let's analyze what is the trend and what kind of trends we can come across. For this, I will be sharing a chart with you. So let's analyze Euro-US dollar chart. The market is always dynamic. The price can go up or down. If the market goes up, such tendency called an uptrend. A series of higher lows and higher highs tells us about an uptrend. Each next minimum must be higher than the previous one, as well as the next maximum must be higher than the previous one. Don't be afraid. It is simple to determine the trend. If the line goes from the lower left corner to the upper right of the monitor, it means you see an uptrend. Now let's have a look at the example of a downtrend. Series of low minimums and low maximums will tell us about a downtrend, where each next maximum will be lower than the previous one, and the next minimum will also be lower. Note that there are periods when it is hard to determine the trend and price moves within the corridor without any trend. Such tendency called flat, range or sideways move. So is trend really is your friend? Usually a trend corresponds to a particular time frame, and depending on the time frame, the trend can be divided on short, medium, and long term. In the long-term trend, there might be several short-term trends in the opposite direction at the same time. As a rule, it is recommended to open a trade in the direction of a trend. If the trend is up, open a buy trade. If the trend is down, open a sell trade. In regards to binary options and trading strategies based only on trends, it is not recommended using them, since in binary options, a crucial role plays expiry time and the entry point, especially on the short time frames. The price fluctuates. You can go with the trend, and at the end of the expiry price will spike in the opposite direction, and after the expiry will come back. If you decided to trade based on trend, then don't open trades lower than the daily or weekly expiry time. Buy option in the direction of a trend. If it's an uptrend, you should buy a call option. If it's a downtrend, buy a put option. In any way, watch the chart, but you can't count on it completely. Spend time watching charts, study the asset that you trade and its historical behavior. Now as we know a little about the trend lines, let's talk about the support and resistance levels. Some traders successfully use levels to trade binary options, and depending on what level price touches, they buy a put below option or a call above option. What is the level of support? This is the level where the price is more likely to reverse and go up. Support level is located below the current market price and is based on the price minimums in the past. What is the level of resistance? This is the price level located above the current market. It is based on the price maximums reached in the past. Price has reached such maximums, has tested it, and is most likely will go down. How to apply this for trading binary options? When the price dropped to the level of support, tested it, tried to break through, and started to bounce in the opposite direction, it is a good time to buy a call option, expecting the price to go up in the near future. And if the price hits the resistance level, bounces back, it's a good time to buy a put option. In this chart, you can clearly see levels of support and resistance. To remember it better, apply this analogy. The level of support is a floor, price is a ball. When the ball falls on the floor, it bounces up. The level of resistance is a ceiling, and when it hits, the ball bounces down. Support and resistance feature is that they can shuffle. This occurs after the price is testing support or resistance level and then breaking through. For example, the price broke the resistance level and continued to go up. It was a level of breakout. Then resistance becomes a support. Multiple bounces of support or resistance level indicates on higher significance of this level. Now you know what the support and resistance levels are. So let's get into another interesting topic, round price levels. The fact is that when the price reaches such level, multiple of 100 or a 10 or a 20, as a rule, this level becomes a support or resistance level. Human brain is designed so that it tries to round everything. For example, when you see the price of 1,498, you will try to round it to 1,500, as traders do. Therefore, at these levels, there are a lot of buy and sell orders, which is a real battle between bulls and bears. It works for stocks, indices, currencies, and commodities. On this chart, round numbers are marked with the red line. Look at the price action around these levels. I'll let you make your own conclusions. So now, as we know the support and resistance levels, round numbers, we can talk about the breakout strategy. It is a simple strategy that's successfully used by many traders. The main element of this strategy is the ability to find the support and resistance levels. It is better to use this strategy when there is no clear direction of the trend. As we mentioned previously, before starting your daily trading, support and resistance levels should be marked on the chart. So what is the essence of the breakout strategy? When the price approaches support or resistance level, as a rule, trend is expected to reverse or change the direction. The more often price is testing the given level, more reliable it is. But sometimes the price does not reverse but break through the level, followed by a slight pullback. Then movement continues in the direction of the breakout. As can be seen on this chart, price was testing the resistance level before the breakout, the red line. Then, with a strong move, it breaks through the resistance level. After that, once again, price retraces back to the resistance level that has been broken, but not for long. And finally, after price tested level of the breakout, it continued to move upwards. Same can be witnessed after the support level is broken. The price retraces back to the support that becomes a resistance, providing an opportunity to open a trade. In breakout strategy, there are two options for entry. First is when the price has confirmed the breakout without much resistance, buy an option in the direction which the price moves. If we would take the second example, then we would have bought the put option. Do not enter a trade if the price moved too far away from the level. Upon expiry, watch the asset behavior in the past. How many candles after the breakout the price moved in the same direction? How many candles after the breakout the price moved in the same direction before a pullback? Open trade for a period, not more than 1 or 2 candles. To remind you, on 1 hour time frame, 1 candle reflects the price movement of 1 hour. If you're looking at the 30-minute chart, then 1 candle would reflect the price movement of 30 minutes. Now, the second option for entry is if you missed to open a trade straight after the breakout, you will have another opportunity on the pullback. As you can see on this chart, after the breakout, the price returned back to test the breakout level again. Then it continued to move in the direction of the breakout. Such breakout pattern is quite common, and it is a good opportunity to open a trade in the direction of the breakout. It is also simple with the expiry time, because after that, price usually moves in the same direction for extended period of time. At the end of this lesson, as usual, I would like to give you an assignment. Number 1. Plot on the chart the support and resistance levels with different time frames. 1 hour, 1 day, 1 week, and so on. Look at the history of how many times price bounces from these levels. This will help you quickly navigate when the price will get close to these levels. Number 2. Look at any chart for round price and analyze the movement of the price at these levels. Number 3. Study the history of a chosen asset and how the price behaved throughout the breakout of the important levels. In the next lesson, we will look into the reversal pattern, such as Pinocchio and Doji model.